We are live.
Hello, hello, hello. We're good, Hardik? We're live
Yes, we are live
on YouTube
and Facebook.
and Facebook. I love it. Well, listen, everybody, thank you so much for your time and attention on this. I don't even know what day of the week it is. Monday, on this Monday. I really appreciate it. We're going to get started here in a second. The whole table's shaking, sweetheart, so you might want to, Erica's got her elbows on the table here, and so we're going to make this a little more stable. In any event, we're going to get started here in just a couple of minutes. People are still joining, so let me do a few things. One, I just want to thank you for your time and your attention on Monday. I've been spending an incredible amount of time thinking about sort of the future of short-term rentals and how to position myself, for myself personally, my own portfolio, for my investors, to create something of lasting value, a legacy for my family, my kids, my estate, and to sort of, using that Apple thought process, like make a dent in the world. And the way that we can make a dent in the world is to give the people what they want before they even know what they want, right? Like it's that old Henry Ford saying, if you ask people back in the horse and carriage day what they would want, they'd say they wanted a faster carriage. They had no idea about a car and combustible engines and all of that. And it took somebody like Henry Ford to think forward and give them that. So we're not going to revolutionize the world like that. We're not creating engines or motors, and it's not really quite as hard. It's certainly not nearly as technical. And I think we're going to find that it's actually liberating. Like once we understand what we're doing, it sort of like all makes sense and the light bulb goes on. And so to that end, I want to share the following. This methodology that we're going to discuss is equally applicable whether you're new to Airbnb, you're already getting started, you've got one property, or you are launching a full-fledged career. And I can't tell you how excited I am. I get emails and we see posts in the Facebook group almost every single day now, people who have left W-2 jobs that they're dissatisfied in, right? There's nothing really wrong with the W-2 job if it's your passion, you love what you're doing, but there's so many people that are doing W-2 jobs sort of to pay the bills, and it's really, really rewarding for me personally to allow people to live a better life, a life that they dream of and what they want to do. And so the lessons that we're going to go through here are equally applicable whether you're brand new, you've gotten started, or you're really scaling and want to take this to the next level. So I don't want anybody to think that this is not applicable to them, because even though it's advanced strategies, we're going to break it down in very simple layman terms so that everybody can understand. And if you think about it, why wouldn't you want to get started the right way, right? Like, why would you want to go fumble around, do it your own way, learn from mistakes, and then do it, ultimately the right way, but a year or two down the road? And that's the opportunity that we have, because the things that I'm going to share with you, I'm extremely confident this is the future. There's almost no doubt that this will occur. And the reason I can say that with such high levels of conviction is if you just study the past, history does in fact repeat itself, but more importantly, the basic thesis that I'm going to share with you is money management and what people do to make more money. And I understand what they need more money for. There's professional institutions that have liabilities, whether it's pensions that they owe their employees or their ex-employees. They have liabilities, and so they must invest significant amounts of money, and they can invest in bonds, which, by the way, have negative rates. So if you're investing in bonds personally or you're an institution, that's not good and that's not sustainable. And so consequently, there's trillions, hundreds of trillions of dollars that will leave bonds, and they will make their way into stocks, perhaps at all-time highs, and or real estate, and a few other things like crypto and so on and so forth. But if you study what these institutional investors and the flow of capital does and understand why they're doing it, then you'll understand quickly that they have no choice but to follow the playbook that I'm going to lay out for you. And for those of you who don't really know this stuff yourself and ask, well, Richard, how do you know? At the end of the day, that's what I used to do, right? My first career in Richard 1.0, I was a professional fund manager. I ran $4.5 billion with a B dollars of institutional capital for people like pension funds, endowments, universities, insurance companies. And so I know firsthand those conversations. And I also know firsthand what they're looking to invest in and how they invest and how they think. And so everything that I'm sharing with you, I have incredibly high conviction will occur. It's just a matter of time. And the good news is we have time on our side because we're early and nobody else is thinking about this or doing this for a variety of reasons. I'm uniquely qualified in the sense that I was a fund manager. Now I'm an STRU educator, and I'm also a real estate developer. And so like that triangle, if you will, allows me to see the opportunity set with clarity and conviction that other people either don't see or have yet to think about it. So that's a little bit of the background. Again, very good whether you're brand new, you want to get set up the right way, you are doing this currently and you don't really have a lot of interest in growing, but you're doing it. And so you might as well do it better, be more profitable. And most importantly, it's not even so much that you want to be more profitable, it's that you want your profitability to remain for the foreseeable future, right? Like just because it's working today, I can tell you definitively, it's not going to continue to work tomorrow. So we want to create a moat around what's working so that we can continue to own that lake house, that mountain house, that beach house, and use it occasionally and rent it out and continue to pay the mortgage and so on. And then for those of you that will likely benefit from this the most from a financial perspective in any event, anybody who's growing, scaling, raising money, partnering, looking to really take advantage of this stuff is gold, right? Like literally I'm sharing with you everything that I'm doing personally, everything that I'm doing on behalf of my investors, and we are going to do quite well as a result of positioning ourselves intelligently in advance of this institutional capital. So if that sounds good, please throw some likes or some hearts on Facebook if you're there. For those of you on YouTube, please go ahead and like, comment also. We're trying to get as many people in the short-term rental university sphere to learn these lessons, because that's why I do these channels and the Facebook group and so on, is to benefit as many of you as possible. And we're not in competition with one another. Like we are growing really quickly. I think Hardik shared with me that we're getting about 100 YouTube subscribers a day. We're getting in excess of that in the Facebook group a day. So we are growing really quickly. And the reason that I share this all with you is because I want to grow you and I want you to be more profitable and I want you to have a great, wonderful life and career and so on. But 50 or 100 people is nothing, right? Like I filmed a video, Brian Chesky's asking for more hosts. They see demand for millions of more listings. So if we get 50 more people and we share the good news and share the wealth, like that's good karma, it's paying it forward. And I have no problem with that. I'm in no competition with you or anybody else, even if you're my neighbor, right? Like ultimately what I do is unique to me. It's connected to my why. It's the way that I see the world. And you too should feel similarly about helping other people along the path. And so to your little thing, I'm sitting here, and Erica is as well, on a Monday night, trying to grow you and educate you. So do yourself and everyone around us a little bit of a favor. Share the love, like, hearts, comment. I'd appreciate it. Let me say the following. I have a couple things from a housekeeping perspective before we get in a little further here. The first thing is, I would encourage you to get on my email list. Every day I write an email to over 10,000 of your peers in the STRU community, and I share either what I'm doing on a daily basis, whether it's deals or contracts or negotiations, hospitality thoughts, leadership thoughts. Really, I like to keep it very, very fluid and flexible because it's kind of like my own journal, right? So I'm like writing for myself to benefit myself and to grow you as well. And it's really simple. All you have to do is go to www.str.university. So no .com or anything else, www.str.university, and then just enter your email and we'll send you the daily newsletter. You'll be getting it like 10,000 of your peers, friends, members, etc. So that's the first thing I would encourage you to do. Excuse me. The second thing, we are announcing, and this is not today, but I'm just going to share it with you. We're announcing that I've launched a new firm and a new fund. It's called Stomp Capital. Oh, before I even get to that, when you get to str.university, it's a brand new website. We just launched a brand new website to no fanfare. We didn't even announce it, so you've heard it here first. Go check it out. Let me know what you think of the brand new website. It's been a long time coming, and I think it's spectacular. So I'm really excited about that. On to the second thing. We launched a second website, which is www.stompcapital.com. And this is where I'm going to be sharing investment opportunities for you to co-invest with me, as long as you're an accredited investor. Not my rules, but I play by the rules. So if you're an accredited investor, and that basically means if you're an individual, you make more than $200,000 a year. If you're lucky enough to be happily married, then you have to make $300,000 a year combined, and or there's a net worth capability to meet the criteria, which is you have to be worth at least $1 million, not including your primary residency. So many of you fit that bill and are accredited investors. And if you want to participate with all of the deal flow that I'm seeing and doing, and you want it done for you by me, this is a great way to get instant diversification and my best thinking. And really, this is where I'm investing all of my capital and all of my investors' capital. So these are my best ideas. So check out Stomp Capital, also a new website. But the reason I share with you about Stomp Capital is not to encourage you to sign up or get on the wait list, although you should, is because the cohort-based class that I'm leading, tickets go on sale tomorrow, by the way, Tuesday, 8 p.m. I think there's about 600 people on the wait list, which is amazing. I'm going to do as many as it takes throughout the rest of this year and into the following year to satisfy all that. And the people that are on the wait list and buy tickets, I think they go on sale tomorrow, Tuesday at 8 p.m. They're going to be on sale for 72 hours. At the end of the 72 hours, we are closing down. And those are the lucky alpha participants, the first cohort-based participants. And as part of that, as a way to reward and encourage all of you to sign up and participate and learn and get started earlier rather than later, we're giving you 50% off the ordinary price. So if you want to do this and you want to save some money, you might as well buy it and be part of the alpha cohort, which is going to be incredible. And the first class, just so you know, starts 1 week later, July 27th. We're going to be doing them Tuesday, Thursday, I think 6 p.m. to 8 p.m. for 3 weeks in a row, a total of 6 classes, 12 hours. There's homework, there's case studies, there's my deals that I'm analyzing, there's community, right? You're with like-minded entrepreneurs and peers, and there's accountability. We're going to be holding you accountable to grow and to stretch and so on and so forth. So that's what's going on with the cohort-based class.
It's going to be amazing.
It's going to be amazing. But it brings me to the point about Stomp. This is really, really cool. And this is something that I'm very excited about. Graduates of the cohort-based class, which is going to be called something like Professional Short-Term Rental Investing and Management. Graduates of the cohort-based class can apply kind of like in a Y Combinator scenario where I get to know the students, I get to see their work ethic, I get to see their knowledge and their thinking, their participation, their deals. And if you want me to co-invest with you, meaning like you want to grow, you want to scale, you've got great ideas, but you're lacking capital. And I know that's many of you because I get emails and solicitations and Facebook posts and it's like, I want to buy this, but I need $1 million. Graduates of the cohort-based class can apply, and we will be raising capital from accredited investors in the STRU community and taking that capital and investing it into people that need the capital in the STRU community. So it's full circle. It's almost like Robin Hood. We're not robbing anybody, but we're taking from the wealthy and we're redistributing it to those that need capital. And it's going to generate incredible returns because we're going to be following the playbook, the blueprint, the step-by-step methodology that I'm doing for my own personal investing and sharing with all of you at high level today, and then in the cohort-based class in granular detail. So if that sounds good, and or you have deals that you want to fund and you need capital, go ahead and like the video again, or thumbs up, or hearts, or put comments, because I'm really excited about it. You might ask, why do I want to do that? Well, here's what I would say. One, because I really want to partner with all of you and grow all of you and give you opportunities that you wouldn't have otherwise, right? Two, because it allows me to diversify my portfolio and see deals that I wouldn't do. You know what's better than like my one set of eyes? How about 52,000 YouTube subscribers finding deals? How about 35,000 Facebook members finding deals? How about, I know that they're all really highly qualified because they've gone through the cohort-based class, and so we're all starting at the same base level, foundational level, and so on. And so I'm just really excited about all of this and partnering and bringing some of your dreams to life at the same time, growing our portfolio, diversifying our portfolio. You know how I feel about diversification, and also generating significant returns for myself, for yourself, and for our investment partners. So that's the whole like circle. That's how it all fits together. STRU, Stomp Capital, cohort-based course, funding back in, and so on and so forth. So a couple different housekeeping items that we just went through. Did I miss anything, sweetheart?
No.
No. Okay. So sign up for the email, sign up for the wait list for the cohort-based class. Tickets go on sale tomorrow, 8 p.m. They're on sale for 72 hours. I will just share with you one little thing here, and then we'll move on to the content. There's a couple of different options. One is just participating once, and I think you'll grow and you'll benefit tremendously from it. A better approach, if you're really a student and you're taking this seriously and you want this to be a bigger part of your life and your portfolio, maybe you're committing yourself, or your goal is to commit yourself to leaving your W-2 job and doing this full time. We are also creating an opportunity to participate in all the cohort-based classes for 12 months. And that's kind of what I did in the Tony Robbins Platinum session. I could go to the Unleash the Power, I could go to Date with Destiny multiple times. And you might ask yourself, well, why would I do that? And the answer is really straightforward. Repetition is necessary, sweetheart. The whole repetition is really the key to mastery, right? So hearing me present the same thing with slightly different nuance, with very different examples, with different case studies, with a different community, but the same content over and over and over again is how it becomes something that you completely understand at like your cellular level, right? Because I can say this to you and you can listen and you can comprehend it. But what we need you to do is go from comprehension to action. And in order to put it into action, you need to own it. And so the best way to do that would be to attend multiple of these cohort classes. And so that's why we offer that. And then the third thing I would say is there's an option there where for people who are literally committed to this and or raising money and or sold something and are looking to do something, we're holding our very first ever Professional Investor Summit. It's going to take place at my hotel in Palm Springs. And that's on the checkout as well. That's October 22nd through October 24th. 72 hours with Eric and I, and there's limited seats. I think there's 11 or maybe it's 12. So 12, okay, dozen. And then with Eric and I, it's a baker's dozen. So if you're looking to really take this to the next level and really grow, and you want some one-on-one time with me and 11 other hard chargers, consider that option. And part of that, again, in growing you, is we're going to offer my financial analyst, my financial resources, my financial team that does all of my modeling to model your deal as part of that. So anyway, that's the real deal. All right. And there's also on that level a one-on-one with me so that you can ask me either before you invest or while you're investing. Anyway, you guys can go to the checkout page. Enough about that. Really what I want to share with you is the following. We are very, very early in this opportunity, short-term rental opportunity, Airbnb, Vrbo, however you want to label it. I know it seems like we're advanced. You know, we have hundreds of thousands of people that follow me on YouTube and on Facebook, and you've got one property or 6 properties, and you've been doing it for 3 years or 5 years. And that's all amazing and remarkable. And I don't want to diminish that at all. But if you take a step back and just think about where we are in the cycle, we're still in the very early adoption phase. And the way that we can determine that, and for those of you who came to STRU Live, you heard about this in depth, but it's still hard to get capital, right? Like traditional banks don't loan to us. It's still hard to get insurance. Traditional insurance companies don't loan to us. If you speak to an average person on the street, they don't think that short-term rentals is an asset class. They might still think you're a little crazy that you put your beach house on Verbo. They may stay in a Verbo, but they think it's like crazy that you're doing it. And most importantly, the reason that it's very, very early in this phase is that there's zero institutional capital. And the institutional capital that has been raised in this space is really going after rental arbitrage. And all the strategies that I'm about to lay out with you, by the way, work for rental arbitrage. They work for co-hosting. So wherever you are in your journey, it works. What I would encourage you, if you're doing those non-equity type plays, rental arbitrage or co-hosting, save as much money as you possibly can from that income. Try not to live off of it. Try not to spend it. Instead, try and save it so that you can buy some equity. Because here's the deal. The price appreciation that we've all experienced as hosts, that generates wealth. You can't really spend that. It's not taxed, so it's tax advantaged. And that's really the passive income in this strategy, right? So like we actively work on a daily basis. We answer communication. We've got cleaning teams. We've got marketing that we do. We've got our own direct bookings. None of that is passive. It's not a ton of work, but none of it is passive. But if you have a home that's worth $1 million and you hold it for 5 years and then it's worth $2 million, that is the passive income, passive wealth generation. And if you're doing co-hosting or rental arbitrage, you're missing out on that price appreciation. And from a macroeconomic perspective, I think there's more price appreciation ahead. I know that we're at all-time highs. I know that the real estate market's on fire, but the amount of money that the Federal Reserve and central banks all across the world have injected due to COVID is unprecedented. And we're at the very early stages of feeling that inflation. So I think real hard assets have much more runway ahead, especially there's now talk, and if you saw the Dow Jones today was down 700 points, all due to potential fear of the Delta variation that's going to maybe mask again and closing again. And I hope we don't do any of that, and I hope you all stay safe. But the point is, there's real opportunity here for your assets to generate additional wealth, and that's all passive. So you want to make sure that you're positioned that way. So we're early, right? And I want to share with you my thesis, which is that Airbnb, Verbo, Short-Term Rental University is now entering phase 3.0. So let's just go through what that looks like and what that means. The first phase is sort of when I got started on Airbnb, and let's say that was 5 or 6 years ago, and literally anything that you put on that platform made money because there wasn't a lot of competition and there was a lot of demand and it was growing really quickly, and you didn't even have to be a good host, and you didn't have to have a good property. You didn't have to do anything really well. It was really, really easy, which fueled more growth as people understood that this was really working. And they told friends, they told neighbors. I started a YouTube channel. Maybe you expanded to your second location. So, 5, 6 years ago, it was really, really easy to make a lot of money on Airbnb. And if you were around back then, chances are you've got more property today than you even thought you would because it worked so well and you intelligently reinvested. So that's Airbnb 1.0. That time has come and gone, and we won't see that again. So today, right now, here we are in 2021, we are in what I call short-term rental 2.0, STR 2.0. And basically what that means is most everything works really well, but we have to increase our standards, our hosting, our intelligence as far as how we price. We're paying attention to occupancy and ADRs, and we're using dynamic pricing, and we're doing calendar management. And so there's a level of professionalism that's in the industry, but it's mostly people like you and I, mom and pop. It's a very fragmented industry. Even the people that have multiple locations tend to be, concentrated in their backyard or in their neighborhood or in one vacation location. For those of you that have participated in STRU Live or follow the channel, I see so many more people embracing remote hosting, which I've been a big advocate. All you have to do is check out the YouTube channel, and you'll see that I've been touting the benefits of remote hosting for, since the very beginning. And most people initially, when I would make videos about it, would give me self-limiting beliefs about why they couldn't do it, and it's too hard, and nobody can clean as well, and I don't feel comfortable. And now what we're seeing, especially the attendees of Short-Term Rental University Live, like no one's looking in their backyard and nobody's looking in the same location again. In fact, they've really embraced this portfolio approach where we're now adding different geographies so that we have different risks, we have different exposure, we have different clients, we have different everything, because we're not trying to duplicate, we're not trying to replicate. What we're trying to do is have more units of profit for the same level of risk, or if done intelligently, we want more profit with less risk. And that's the holy grail of investing. So that's where we are right now. STR 2.0, pretty much everything is working, but if you want it to work well, you've really got to up your game. You have to watch these YouTube videos. You have to subscribe to my email channel. You should be participating in the cohort-based class to up your game even more. But that's where we are now. And that's where most everybody thinks like we're going to stay. And that's where, if you listen to other people on YouTube and in Facebook and everywhere else, everyone's sharing with you the how, right? Like, here's how you monetize today. Here's how you host. Here's how many forks. Here's how many spoons. Here's how many wine glasses. Here's how you do the turnover and all of that. And that's important. But honestly, that's like giving you a fish as opposed to teaching you to fish and think for yourself and understand what the opportunity set is. And so if we can teach you to think about the why and the implications and how to do this intelligently, not only does it benefit you in the short-term rental market, but you become a much better entrepreneur and you can find opportunities faster and better and ahead of the curve, as opposed to being reactive or part of the mainstream. So what do I see in Airbnb short-term rental 3.0, and what does that exactly mean? Well, really what that means is that it's going to get even more competitive, far more competitive, millions of more hosts, millions of more listings, and prices are going to go up for people that are doing well. And consequently, it also means that it's going to go down for people that can't keep up. And that's really kind of scary. And perhaps, I'm not trying to scare you, but if you stop and think about it for a second, let's just say that you've got a great lake house and it's paying the mortgage and it's paying the utilities, and also you've got tax benefits and depreciation. And on top of all that, you make $12,000 a year of income. So $1,000 a month, and you kind of like that. It works really well. Well, if you keep doing exactly what you're doing, that number is going to decrease. It's not going to remain 12 for the next 10 years, the next 20 years, the next 30 years. It's going down because there's going to be a guy or a lady next to you at the lake house that says, I'll do it for a little bit less, and I'll do it for a little bit less. And then there's more and more people. And so it's going to be an uncomfortable situation for many people that don't adapt. That said, if you do adapt and we get to where we're going on STR 3.0 sooner and faster, then it becomes a competitive moat. And what I mean by that is, like my short-term rental university channel. I happen to think it's quite good, and I know it's changed the lives of very many people. But one of my competitive advantages in this channel, for instance, is that I got started 4 or 5 years ago. If I were to start today, it's a lot harder because there's that many more people on YouTube trying to do exactly what I did. Only I did it 4 or 5 years ago, so I had a head start. And now I've got a competitive, sustainable advantage for the foreseeable future. And that's what we want you to have in your short-term rental business. Again, whether it's just, you're just launching, or you've only got one place and that's all you want, or you say, you know what, I've got 3 places and I want to go to 30. No matter where you are on that spectrum, you want to be ahead of the curve. You need to be far ahead of the curve. And the good news is we're so early that all of us can do this. All we have to do is broaden our horizon, think outside the box, think forward, and understand that everything that I'm sharing with you is like for real. It's not speculation. I'm not saying, oh, I think the stock market's going up. I looked at this chart, it's going down. I looked at crypto, it's going up. Like, I can tell you the playbook. The playbook is in the 3.0 world, that institutions are going to flood this space with capital. Why? Because they've got need for yield and they can't get it anywhere else. So real estate is one of the most important investments that all of these institutions have, and they invest in every single type of real estate, from multifamily, industrial, retail, warehouses, I don't know, commercial, office space, long-term rentals. In fact, did you know 1 out of 5 homes in America in 2020 and 2021 was sold to institutions? My prior employer, the Blackstone Group, just spent something like $7 billion and bought something like, I don't know what it was, 10,000 homes, single family homes, and they're renting them long-term. So you want to rent a home, your landlord is my prior employer, the Blackstone Group. Here's where you sign for 12-month lease. And the reason is because homes are becoming unaffordable for many. And so they have a forward-looking bet on where the economy is going and where the opportunities are going. And they say, you know what, multifamily is priced to perfection. There's no more edge there. That is like, that game is over. It's a hot potato. One multifamily investor buys a property, pays too much for it, puts in granite countertops, maybe puts in, I don't know, new windows, increases the rent by $12 a month on 100 different units, and then they sell it to somebody else. And the person who's buying that is, a vet or a dentist or a doctor. No disrespect to any of those professions, quite noble professions, but not necessarily the wisest investors. Just sort of like, well, I want cash flow and this is working. And that's actually quite risky, because when you're paying too much for an asset that does not generate a lot of cash flow, that doesn't end well. I don't know when the music stops, but I've seen it stop, and you don't want to be holding that bag. So Blackstone, KKR, Carlyle, all these big private equity firms that raise hundreds of billions of dollars continue to find new emerging asset classes to invest in. And what makes these new emerging asset classes investable and exciting is that they have higher returns and they're not crowded. And so Blackstone wants to get in before KKR gets in. And then once Blackstone makes an announcement, then KKR comes in, and then Carlyle comes in, and then it goes on and on, TPG, and just on and on and on and on. So once the first person starts to make inroads and makes the announcement, then you see many other people coming in. And if you stop and think about it for 1 second, what's the real difference between Blackstone owning, let's say, 10,000 single family homes and renting them long-term versus them saying, you know what, I'm going to rent them short-term or medium-term, or them saying, you know what, I want to have like the best collection of beach houses across America, or I want to have all the right lake houses across America. It's not far-fetched. And in fact, it's going to happen. What I can't tell you is whether it happens in 24 months or 48 months or 72 months, but rest assured, it will happen. It has to happen. There's no more yield anywhere else. And yet they have all these investors that have given them tens, hundreds of billions of dollars that want returns. And we all know how juicy and fat and amazing the returns are in the short-term rental space. How do we know? Well, because we're managing our own properties and we're growing and we're scaling and we're reinvesting. So these smart institutions will figure it out relatively quickly. And so you might ask, well, why are they not doing it today? And the reason they're not doing it today is because they're worried about regulation. They're worried about how scalable it is. They don't really understand like pricing and dynamics. And the big thing is that vacancy risk is mispriced. That mispricing, that arbitrage, if you will, that eventually gets understood. It gets modeled, just like Black-Scholes modeled the option market. Now the option market's a very deep, fluid market. But back then, like when O'Connor and Associates started trading options, you were making a killing because it was mispriced. That's why Warren Buffett was a huge investor in property and casualty insurance, decades ago in Berkshire Hathaway, because the insurance market was mispriced. Today, it's very competitive. It's not mispriced anymore. So the returns that we're getting in the short-term rental space relative to the risk, which is really owning a single family home, not any different than what they already own, is mispriced. That will eventually diminish. We can stay ahead of that. We can keep our returns up, but not by doing the exact same things. We have to start thinking differently. We have to position ourselves differently. We have to embrace the fact that the world is changing right before our eyes. If you saw my video on medium-term rentals, on remote working, whether it's here to stay, and if you understand and comprehend that the institutional investor will be coming, then once you understand all that, we can take some action. So I think I'm going to pause here because this is a little bit of a important point on where we're going and what I will be teaching in the cohort-based class in detail. And I want to give you some real life examples, but maybe if there's any questions, do you have anything?
I do have some questions, yeah.
Cool. And by the way, if you guys are enjoying this or this is making sense, like. Thank you.
We have one STR currently. Our goal over the next year is to add one more. Can you explain why the cohort concept would be beneficial at this stage in the journey?
Cool. Excuse me. So this question is that they have one short-term rental. They're thinking about adding another short-term rental, and they'd like to understand why the cohort-based class would be beneficial to where they are in the journey. And what I would say is, I think I addressed that, but I want to really clarify. The amount of money that you're making today on that one unit is going to decrease. It just is. There's going to be more competition. So unless you start doing things differently and position yourself intelligently and understand these very simple like ideas and ideology and create a moat to protect that cash flow stream, then your income is going to decrease and you're gonna have a harder time buying a second one. And it may not even make sense, right? So like what you need to do is attend the cohort-based class to understand these very fundamental strategies. And I think this is a good time to introduce one to you because this is exactly what you're asking. So one of the things that everybody does, everybody on this YouTube channel, everybody in the Facebook group, all of the people that we know, we go out and we buy individual assets. We buy one house at a time or one condo, one apartment. We think about these individual assets. And I've been teaching and helping many of you, especially the STRU Live attendees, understand that you should diversify geographically, diversify by natural risks. So if you've got hurricanes, maybe you add earthquakes. If you've got earthquakes, maybe you add wildfire, you know, all of these different things so you have a more robust, diversified portfolio. But we're still looking at the individual asset class. If our competition in the future is these institutions, we need to start thinking like institutional buyers. And institutional buyers think about portfolio level construction. They start with a top-down thematic approach towards their investment. That's how they will get to the short-term rental market in the first place. And then they'll say, here's how I want my short-term rental exposure to look like. And then once they have that thesis, they will go populate the portfolio with individual bottom-up selections. Like, oh, this house makes sense because I'm looking for that risk. This house makes sense because I'm looking for that location. This house makes sense, but they think about it exactly the opposite of the way that we think about it. And I think about it like an institutional investor because that's in my background. That's how I got to Airbnb, you know, years ago. That's how I got to short-term rentals. That's how I got to YouTube. That's how I'm now developing for properties. That's how I'm doing Stomp. So I'm always pushing forward and trying to be ahead of the curve because here's the thing. When you're ahead of the curve, you have so much wind at your back and you make so much more money. It's much easier than when you're like, oh, that's a safe investment. Everybody else I know is doing it too. So let me try it. The best money has already been in the past. So to answer your question very specifically, I'm going to teach you how to position yourself and how to think at a portfolio level so that you're buying the right assets for the right reasons. And then you'll have much greater likelihood of actually expanding. And most importantly, keeping your profitability up and building a protective moat so that you can go from 1 to 2, 2 to 3, 3 to 6, etc. And the beautiful thing is once we do this intelligently and properly, the way that institutions will enter this market is by buying small portfolios, right? All you have to do, again, you know, history repeats itself, study the playbook. Any fragmented business that was a really good business that was run by mom and pops, they do what's known as a roll-up strategy. Extremely lucrative, right? They go out and they pay mom and pop a premium so that mom and pop sell. And they're like, oh my gosh, I just made $3 million or $8 million or whatever. That's pennies relative to a $100 billion fund, right? So they pay us $6 million 8 million, 10 million. They take our 3, 10, 15 properties off our hand, but it allows them to scale. It also allows them to purchase assets that have performance, that have cash flow, that are stabilized, that have infrastructure, that have cleaning teams, that have management, that have brands, that have reputation. So like they're happy to pay for that because it means that they're getting cash flow with less risk. They don't want to build it. They want to buy it. So whether you want to exit or you don't want to exit, you always want to build it with an exit in mind, so that should you want to exit or should you get an unbelievable offer, you can, right? And that's why this cohort-based class is so instrumental, because it's going to give you the exact playbook, how I'm doing it for myself personally and for my investors. So I hope that helped. Did that answer the question?
Yeah.
Cool. Another question, then I'm going to continue on 3.0. And
Well, so
again, I'm going to just
say hi, Kevin Cleary.
Hi, Kevin
Alan
Cleary.
Thomas.
Hi, Alan Thomas. Hi, CL. Huh.
Andy
All
Chu.
STRU Live attendees from the Outer Banks. Hello, hello. Okay.
Okay, so here we go. If we have an economic recession, what do you see happening to STR? Slowdown is a given, but how do we ensure continued profitability?
Great question. So if we see an economic slowdown, this individual, you don't know who it was, do you?
I do.
This individual by the name of
The Modern Gentleman.
The Modern Gentleman says that short-term rentals will slow down and that that's a given. And I would say that that is not a true statement. And what we're going to be learning in the cohort-based class is how to avoid that, because guaranteed there will be a recession. I don't think it's anytime soon. In fact, I think we're going through like a roaring 20s type period. So I don't see it on the horizon, but I can guarantee you it's going to happen. And one of the key benefits of a diversified portfolio is that we build it anticipating a recession. So how do you build a short-term rental portfolio that is sort of, it's not recession proof, but it certainly does just fine through a recession, is you have different economic drivers and you appeal to different economic motives. So what you're talking about, The Modern Gentleman, I believe is probably what we all think of as short-term rentals, and they tend to be vacation rentals. In a recession, there will be less discretionary income put towards discretionary spending like vacation rentals, although that might be offset in the future. We've never lived through a world where there's this much remote working. You might find that, you know, your short-term rental in a really great mountain house, beach house, vacation area does quite well, because the people that are, you know, actually thriving in this environment are going to be the creative types. Artificial intelligence is going to do just about everything else except think like a human, right? So if you're a comedian, a comedy writer, an author, a YouTuber, if you've got content and you use your brain to educate and entertain other people, artificial intelligence is not able to do that yet, but it can do just about everything else. So in this world where we've got remote working and gig economy and creative types and YouTubers and so on, there might be a bid that we've never seen before for these vacation rental areas, because most people like myself find those areas inspiring and creative and so on. But you're right, in those vacation areas, I anticipate less discretionary income. And so you might say to yourself, well, Richard, you know, tell me, what do you mean by other drivers of short-term rental demand? And it's pretty straightforward. Think of business travelers, think of colleges, universities, boarding schools, right? Traveling nurses, other people staying in short-term rentals other than pure discretionary income. Like they may have to stay in a short-term rental for other reasons. And so they're going to continue to do that through recessionary times and so on. So I don't think it'll be the most robust period, right? It's hard to be an entrepreneur and a business owner during a recession. We're all looking for that recessionary proof investment strategy. And we're going to teach you how to create a portfolio, because I guarantee you when Blackstone enters this space, they're not going to just go buy vacation rentals. They're going to have things that are near conference centers. They're going to have things near airports. They're going to have things near colleges, near football stadiums, like places that people are going, and they're going to need short-term rental, and they create a portfolio to weather all of that. It's called an all-weather portfolio. Ray Dalio of Bridgewater, one of the most successful hedge fund managers in the world, termed that, and his biggest fund, I think, is called the all-weather portfolio. And basically, it's supposed to be consistent, low volatility, high return. And that, I know I said earlier, less risk and higher return is the holy grail of investing. I kind of missed this opportunity to say, when I say low risk, it's not that you can't lose money. It's just that it's consistent, right? So what these individuals are looking for at the Blackstone Group and KKR and so on is the same amount of repeatable income every single month, whether it's January or March or August, or it doesn't matter. They want the same amount of income. And so if we as entrepreneurs can create that portfolio, our portfolio is going to be worth more. It will trade at a higher premium if we want to exit. And again, we may not want to exit, but I guarantee you this, when you remove seasonality and you remove natural hurricane or wildfire risk from your portfolio and you minimize it, you're going to be much happier too. It's not just institutions that like that, right? Like right now, we're going through our busy season here in the Outer Banks and in Jackson Hole, but it's kind of slow season in Palm Springs and slow season in Palm Beach and slow season in Costa Rica. And that's not an accident. That's the way I've constructed my portfolio. So I'm going to teach you how to do that too. Another question?
Yeah, I mean, we've got quite a few. When
Quite
does 3.0 start?
When does 3.0 start? 3.0 starts for me today. I'm building the 3.0 portfolio immediately. I've been building it. I just didn't know that I was doing 3.0, but that's the way that I invest. That's the way that I think. That's the way that I stay ahead. And so it's starting today. You should start today too, because again, the earlier you start, the more of a moat you have, so that the competition has a greater challenge of like reducing your profitability, reducing your income, and you have a better chance of getting all of these different assets over time into your portfolio. And I want to just share with you, like in real layman's terms, what I mean so that everyone can understand it. Here in the Outer Banks of North Carolina, I've got a large project called Edge Camp Sporting Club. Many of you have seen videos, and some of you, I don't know, maybe 80 of us have all been to Edge Camp Sporting Club. And we've got 50 acres. I'm the second largest landowner here on Hatteras Island, and the largest landowner is the US government. 95% of this island is national seashore or a national park. It's preserved in perpetuity, and they're not making any more of this island. And then Uncle Sam, and then, you know, me. As I build these homes out, and I'm not doing what most developers do, which is they build them and then they flip them, they de-risk, and then they have to go find another opportunity. Because of what I see on the horizon and how positive I am on the short-term rental space, I'm building these to own and operate and manage and to generate that income consistently for years, for decades. And so here's the thought. There's 3,000 single-family homes on Hatteras Island, where I'm sitting right now. They all are vacation rentals, and they're all about 20, 30 years old. And then there's Edge Camp Sporting Club, which is going to be somewhere between 50 and 100 single-family homes that are brand new, modern coastal design, you know, built with design and intent and purpose for short-term rentals. So they're superior. What do you think is going to happen to like the worst of those 3,000 homes? They may not rent, right? And then you go up in quality, maybe newer, maybe bigger, maybe waterfront. They're going to be less in demand than they were before Edge Camp Sporting Club. They're not going to be in more demand. They're going to be less in demand. The first people that have the most money, perhaps the best vacation renters, are going to want something nicer or newer or be willing to spend a little bit more. And so consequently, if they had rented home ABC 3 years ago, now when they go to Airbnb or Vrbo and they see Edge Camp Sporting Club house number 8, they're not going to go look at the house that they rented 3 years ago. Now, it'll still rent for some period of time. They may have to lower their price, but it'll rent because there's that much demand. And part of the reason that there's that much demand, and I've shared this with you as one of my investment, you know, strategies and secrets, and I've shared it time and time again, is because I like to find places where there's scarcity. We are on an island. They're not making any more land. But if you invest currently in a place where there is no scarcity, then there could be, you know, sprawl, more development, more new homes going up, more new everything, and all of a sudden you're suddenly less competitive. So I hope that makes sense, right? Like I'm not doing anything intentionally to harm anybody. That's not my point. But all we're saying is in the 3.0 space, you have to be the one that people want, the one that speaks to your tribe, the one that people say like, well, I know I've stayed there before, but this is calling me, this is speaking to me, this is exactly what I want. I'm willing to spend a little bit more money for it because this is custom built for me. They're speaking to me, and that's going to make you competitively more attractive versus somebody else who's not speaking to anybody or trying to speak to everybody, or just has like a shingle on their house and says, well, you know, I'm stuck in Airbnb 2.0. Do you want me? You might get taken, but for less money, because the professional investors are coming, institutions are coming, and I'm going to be teaching hundreds, thousands of you exactly how to do this. And we're going to do it really well. So let me give one more example, because I think it's really at the core of STRU 3.0. When I moved to Jackson Hole, I think it was 3 years ago or thereabouts, I bought in the best building in Jackson Hole. I bought a duplex, the only duplex, penthouse, walk to town square, best location, everything I've taught you. Location, 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 differentiate is the only duplex, it's the only penthouse, it's the only one walk to town, all these things that differentiate me. So you think I have a moat, right? Well, guess what? In the 3 years that I've lived there, there's now 2 buildings that have gone up that are newer than my building. My building is only 12 years old, but there's now 2 newer buildings where if somebody knows anything about Jackson, or they ask their friends where to stay or something like that, somebody's talking about a building other than mine. So I'm at a disadvantage because I'm not in the new thing. So what do I do about that? Well, what I do about that is I'm about to spend about $250,000 renovating my home that I just renovated 3 years ago to make it even cooler and more on point and more attractive to my tribe, speaking to them directly. And I'm also sitting on the board of my building, and we're going to put together a budget to renovate the common spaces, the hallways, the lobby, the furniture, the art, and all of that to bring us up to speed. So I think it's really easy for you to understand this example, right? Like, through no fault of my own, I'm still doing Airbnb 2.0. I've got a great duplex. I'm in Jackson. But you know what? Somebody just built something newer and more modern, and the appliances are nicer, and you know, the photos look cool, and the tile is newer, and everything just, you know, attracts the right person more. So through no fault of my own, I'm less competitive. And so therefore I need to understand why, and I need to do something about it. Now, once again, we're incredibly profitable. We're having the best year ever, as I predicted due to COVID. The amount of demand is insane, and the ADRs that we're generating are absolutely insane. And it's a really wonderful year. Why? Because Jackson Hole is a hugely popular place for people to visit in the summer, but that's part of my investment thesis. And also it's in a valley, and even more restrictive than that, there's a very small amount of short-term rentals that are regulated and permitted. And that's why I think regulation is our friend, because it allows me to operate legally in a very small section. And there's so much demand that I'm doing just fine. But I don't want to do just fine. I want to do more than that. And that's why I'm reinvesting. That's why I'm on the board. That's why I'm looking for other places in Jackson. And that's what I want to teach you, is that you can't just assume that what's working today is going to continue to work. It's not. There's new entrants, there's new development, there's new hosts, there's new techniques, there's new technology, there's new things happening all the time, only it happens so slowly you don't really know it until one day you say, you know, I used to be making $100,000 a year. Why am I only making 80? And then 3 years later, it's like, you know, I'm not even making 80 anymore. I'm making 50. What's going on here? Well, what's going on here is that people like myself and the cohort-based class and my investors in Stomp and so on, we're eating your lunch, not intentionally. We love you. That's why I'm standing here on Monday at 9 o'clock at night, sharing with you exactly what to do. You just have to do it. So that's the kind of idea about why STR 3.0 will happen. And in order to do what we're doing today at the same profitability or greater, we have to be ahead of the curve. We can't be late, because once you're late, it's really hard to get back on track. Okay, so I see that we've got, I don't know, 130, 150 people on YouTube, which is amazing. Facebook, like 30, which is a little sad, but you know what? Whatever. And a lot of likes, but we could use some more. YouTube, you guys are beating Facebook by 4 likes. I'm getting real-time KPI. So Facebook, more likes, beat YouTube, although YouTube, you know, this is where I got started. All right. Any other questions, sweetheart?
Yes.
Okay. Yes on the questions.
Louis Durrani, Richard, where do you see Bitcoin price in September?
Louis wants to know about Bitcoin. And here's what I would say about Bitcoin. It's having a little bit of a challenge, but not really. You know, if you just zoom out and say, you know, Bitcoin's up 200% in the last 12 months, no one's complaining. It's just if you came late to the party and you bought at 50,000 or 60,000, that you're kind of like, hey, I'm down 50%, which is exactly what I'm trying to avoid here in the short-term rental space. I want you guys to be early to the party. I want you to benefit from it. That said, Louis, I think the opportunity to add at these levels and to have multiples going forward are higher. I buy every single week. It's called dollar cost averaging. That's what I've recommended to everybody to do in the first place. And I think we have almost 2,000 people or something like that in another Facebook group that I launched, which is more investment oriented and it has a very heavy bias towards crypto. It's called Ready Wealth Management. So if you're in Facebook and you aren't in the Ready Wealth Management group, that's another free resource. There's a lot of great people in there. And what I would say is the best is definitely yet to come. I have not changed my opinion at all. In fact, I like it more. Basically what's happening at these levels is the weak hands are selling to the strong hands. And once the strong hands hodl, there's a supply shortage. I love scarcity. I love supply shortages, and the best is yet to come. So
Diamond hands.
diamond hands. Oh, and Ms. Bossy's now hodling some Bitcoin, which is amazing. Really excited about that. All right, what else?
What are your thoughts on the remote working, co-working trends that were triggered during COVID? Does it have legs long term? Is it a strategy worth pursuing in STR 3.0?
Great question. Who's that from?
Rolando Arquila.
Okay, Rolando. I've just filmed a video on YouTube about sort of, did we release it? I don't know if we released it.
We just filmed it.
Okay, so if I haven't released it, it's going to be released soon. But about all of these ancillary things around sort of STR 3.0, where you can make a lot of money. And so in a nutshell, if you think about the gold rush, right? Like very few people got rich during the gold rush by finding gold. The people who got rich during the gold rush were doing the picks and shovels strategy, selling picks and shovels to the gold people, and they consistently sold picks, shovels, and axes, and they made a lot of money. So I filmed a video recently about all the ancillary businesses that you can enjoy and entertain. And in fact, when you talk about remote working, I just released a video. I think that's here to stay. As it relates to co-working, we are sitting in a co-working space that I am launching in a vacation rental market here in the Outer Banks. It's going to be Edge Camp Work. And basically the premise there is that all of these vacation locations have the recreation, the fun, the sports, the activity, the views, the beach, like that's all dialed in. It's perfect. They've been doing that for decades. But the people who come here to do, you know, remote work, or they're going to spend 2 weeks as opposed to 1, or they're going to spend a month as opposed to a week. They don't have the work buttoned up. So there's no real great place to go do a live like I'm doing, right, in a vacation rental. All of our vacation rentals that we're building now all have home offices. But even for people that have more needs than that, we're building this co-working space. It's designer, it's beautiful, it's gorgeous. This used to be a bank, so it's enormous. We're sitting in the vault right now. And just to give you, Rolando, a slightly more substantial response, I'm also building a co-working space in Nosara, Costa Rica to service that. So we're building Edge Camp Work in Costa Rica as well. So I think that that's a huge opportunity. It's not, you know, owning real estate and doing short-term rentals per se, but it benefits from all of the people that are staying in short-term rentals and generating profits. And there's a million different ideas like that. So, you know, think broadly, find an opportunity, think about who's coming, what they're trying to do, or what's missing, what they can't do, and fill that need. You can make a fortune. Great question.
What can professional STR managers with 30 plus properties learn from the cohort class?
And who is that question?
Elliot Thomas Rosen.
Elliot Thomas is a professional manager or owner?
What can professional STR managers with 30 plus
Okay.
properties? So I'm not sure.
So here's what I would say. I think, and it's Elliot, right?
Yep.
Elliot, I think that you're asking about managing properties as opposed to owning properties. So I'm going to just respond on that basis alone. Once again, I would be looking to manage properties that are taking advantage of the 3.0 thesis, because you're going to be making more money for your clients, right? And presumably you get a percentage of that. So if you make more money for your clients, in fact, I had somebody, I'm trying to think who it was. Maybe you can remind me. Somebody I know reached out to me, or, oh, I know who it was. It was RT. I went on Facebook Live and we filmed it. And for the people that get the email, I wrote about this guy, RT. He started following the YouTube channel years ago, and he's been sharing with all of his friends and family, and they're getting into short-term rentals and so on. This is what I mean. Like, there's a lot of people coming, right? So this one individual has told like 8 or 9 other people, and they're all doing well and they're all profiting. And like at a certain point, it doesn't continue, right? Like it has to diminish. It's the law of like numbers. But in any event, his girlfriend, I believe, was managing other people's property. I think she was doing co-hosting, and the traditional property managers were making like $70,000 a year, was what he said, on the property that she's managing. And then listening to the YouTube channel and some of my investment thesis and dynamic pricing and all the things that I've been teaching for, since the start of the channel. When she took over this property, they're doing over $200,000 a year, and so it's like 3x what professional property managers were making by just doing things in a more advanced way. And so her income managing a $200,000 property is far more than her income would be on a $70,000 property. And then she can go tell other potential property owners, yeah, here's what I did for A, and here's what I did for B, and here's what I did for C. And so she can grow and scale her business with these same results. So even if you've got 30 properties and you're quite knowledgeable and quite successful, what I would suggest to you to do is to try and position yourself as best as possible and select the right homes in the right locations that are going to profit from 3.0 and continue to profit, right? Like, just because you have 30 properties today doesn't mean that, at a certain point, the guy who owns home number 6 is like, you know what? I was making 50,000. Now I'm only making 40. Now I'm only making 30. I'm going to just keep it for myself. And now you've got 29 properties and you have 28. Now, again, I'm not trying to, scare anybody here. I'm just sharing with you that when times are good, it's time to think about what could go wrong and to plan ahead, because good times don't stay here forever, right? There's more competition. So you want to position yourself ahead. I've got a question here from Mark Rigdon, my man over at the Short-Term Rental University group, and also Ready Wealth Management. Thoughts on building out your own experiences outside vacation type experiences? We've been brainstorming what are the possibilities to add both value and pricing, add to medium-term rentals. You have them for multiple weeks. Listen, this is exactly what.
You can't just go rogue like that, honey.
Oh, I'm sorry. I'm going rogue and I'm off the grid. Sorry.
I was gonna ask that.
Oh, sweetheart, I'm so sorry. Mark, this is exactly what we're talking about and what we're teaching in 3.0, right? You need to understand exactly who you're attracting and who you're appealing to and why they're coming and what they're doing. And you need to offer those services, those introductions, that amenity set, that service level. And what I say about Edge Camp Sporting Club is we offer, what I call bespoke hospitality. So if somebody wants to come and just get away and enjoy their family and they want nothing, then they have total privacy and they just rent the whole villa and they've got everything they want. But all of the check-in instructions, all of the information, all of the gear, everything is, intentional, forward thinking, it's working. It's intuitive. They don't need to ask for instructions, right? Like, it's all designed so that they can just come here and it's almost like this is their house. They know what to do and how to do it. And, like, it just makes sense. It's intuitive. They're like, this is perfect. This works. And then at the same time with Erica, a lot of the guests want value added services, whether it's a beach dinner or rent a kayak, or they want, whatever, fire dancers. They want, I mean, she can go on and on, yoga, massage, anything. So it's bespoke hospitality, from none, total privacy, to full service like a hotel, and anything in between, right? It's just like a la carte, whatever you want. And here's the thing, in the 3.0 world and in the cohort-based course, we are going to be examining what the best things are of a hotel and what the worst things are in a hotel, and what the best things about a short-term rental are, and what the worst things about a short-term rental are. And we're going to optimize for all of that, right? Like that's exactly the analysis we're going to do so that our guests become loyal, repeat guests, raving fans, tell all their friends, give you 5-star reviews, and you're sold out literally with just repeat guests. And that is the moat, right? Like once you're doing that, you're no longer price sensitive. It doesn't really matter whether a new development opens up. It doesn't really matter if a new house goes up. It doesn't really matter if a million other hosts show up, because like you've captured this family forever. That's what we're doing. Okay, what else, sweetheart? YouTube is crushing the likes, by the way. I don't understand what's going on here. I said to Facebook, but we're up 13 more on YouTube. So come on, keep going. Let's get this algorithm blowing it up, because this is really good stuff and everyone can do it, whether you take the cohort-based class or not. I'm telling you what to do. Just do it. If you want your hand held and you want to be with 100 other entrepreneurs or whatever the number is, again, we have like 600 people on the wait list. So I don't know how many are going to buy. I'm sure it'll be a lot. But if you want accountability and you want community and you want to do this with other people and you want actual case studies and you want to learn exactly what I'm doing in real life, I just mentioned in Facebook, I went under contract today on a big deal today, which is amazing. We're going to be doing the due diligence and the financial analysis and all of the different like theory about zoning and different uses and best use and so on. That's a big opportunity in STR 3.0, is repurposing other assets, right? Like the days, and that's, I guess I should have said this earlier, the days of just buying like any old condo or any old house that was built for, 30 years ago, 20 years ago, 10 years ago, and saying, this is going to be a short-term rental and just like turning it on, that doesn't work anymore, right? Like there's people that are going to be like me, custom building homes for short-term rental. And so you might say, well, what's the difference? Well, at Edge Camp Sporting Club, the top floor, which would normally be where bedrooms are and so on, is the common area with the best views, and that's where everyone hangs out. You might say, okay, well, I'm not building Edge Camp Sporting Club, but let's just say you have a 2-bedroom cottage, bungalow, I don't know, whatever. Do you need the same size kitchen as if a family lived there full time? Maybe you need a bigger kitchen. Maybe that's your niche. Like, hey, we're going to have chef cooking classes, farm to table. And so we need a really great kitchen. The bedrooms are tiny, but the kitchen is huge. It's designed with intent and purpose, calling all chefs who like farm to table. Or maybe you're like, I'm in the middle of New Orleans and this is a 2-bedroom and everyone's going to go out and eat crawfish and go party and this and that and the other. And so like, I need a micro tiny kitchen. So my point is, as we get a more institutionalized asset class and as more money comes into this and as more people dedicate themselves to a career, the stock itself, the housing stock itself will evolve, will change to meet consumer demands. So that's a little thought on that. The concept of just like any old house will be a good Airbnb, that was Airbnb, that was STR 1.0. and STR 2.0. It worked. Going forward, we need to do more than that. That would be similar, if you think about it, to saying like, well, here's a mid-rise building. It used to be an office space, but it's got a good footprint and it's got 10 floors and it's got 20 office spaces. I'm going to just turn this office into a hotel. What do you think? Like, let's just take this footprint and turn it into a hotel. It doesn't work. So the concept of just taking any old home and turning it into like the best Airbnb or short-term rental in 3.0 also does not work. Doesn't mean that you have to like renovate and change it all. It just means that you have to find the right tribe that is looking for that specifically, and you need to speak to them intelligently, articulately, through marketing, through photos, through copy, through experiences, through communication, specifically to that one persona, that one tribe person. And we're going to define what a tribe looks like, what a tribe is, what a tribe means, and how you speak to them so that you attract the right people as opposed to like the random people that are just looking for a home.
So Bray Hill House, that answers your question.
Ray Hill House, that's your question.
Let's see, Toronto Scope. We have a 26 room inn.
Nice.
Would it be bad business to offer them a short-term rentals as well?
This is Toronto.
Scope.
Toronto Scope has a 26 room
Inn. Would it be bad business to offer them as short-term rentals as well?
So the question is, would the 26 room inn be bad to offer them as short-term rentals? And the answer is no. It's a different platform, and I would try putting a couple of rooms on there and see how that works. We do that at all of our hotels. Our hotels, we encourage direct booking. We get a lot of bookings through booking.com, but we also list on Airbnb and on Vrbo, and we get bookings from them all the time. But what I would suggest to you, Toronto, and this is kind of a cool thing, and this is what we're doing here at EdgeCamp, is try going for like whole buyouts. Try and sell the 26 room inn to like a group, a corporate retreat, a wedding, a something, but try and move towards that more value added guest experience, because they can't get 26 rooms somewhere else. And it might sound far-fetched, or you might be like, I don't know, who needs, believe me, we get inquiries every single day for people that are looking for larger accommodations. I've been saying on this YouTube channel that that's a huge underserved space. And the reason is because the average home that's on STR 2.0 isn't big enough, right? Like nobody builds 26 room hotels or 26 room houses. And then in the hotel space, that's kind of too small. You're sort of in this weird spot. So most of my properties that I own are between, call it 14 and 18 rooms. That's sort of my sweet spot. And we try as much as possible to get full house buyouts, and we do quite well. They're extremely lucrative. And Toronto Scope, when you do a whole house buyout, resist the urge to discount. Most people will say, well, if you're taking the whole thing, I'll give you a better deal. I'll discount. It's the exact opposite. When you're speaking to the right tribe and you're speaking to them in the right language and you're giving them something that they can't get anywhere else, you charge a premium, not a discount. And that's all profit. So that's a great question. Another one?
Yeah.
While she's thinking about it, if you're not on the wait list, you're not going to get the opportunity to buy the cohort-based tickets tomorrow when they go on sale at 8 p.m. I think they're going to be open for 72 hours or something like that.
What time zone?
Eastern Standard Time, Tuesday, the 20th of July, 8 p.m. Eastern Standard Time. Buy your ticket. You have to be on the wait list. That's how we're opening it. We're only selling it to the wait list, so you still have, I don't know, 12 hours or 20.
At a 50% discount.
At a 50% discount. Erica reminds me all these
For
things.
72 hours only.
Right. So you have 72 hours to buy it at a 50% discount. Why? Because we want to reward the alpha cohort, the first participants in this that want to go grab the moat sooner. The hungry, the people that really understand what we're doing here and that want to commit not only their time and energy, but want to be held accountable, want to meet community, want to go through this together. So we're going to sell for 72 hours at a 50% discount. And then when we offer it again, once we go through all of the different cohorts, we'll charge an ordinary price, which will be double the introductory rate. So if this sounds like something you want to do, just do it. And here's another thing. If you can't do the dates that we've selected, that we've already identified, that's okay. Buy the ticket anyway, because we're going to continue to do them throughout the year. And you can pick which cohort if you have a conflict of dates. Otherwise, it's first come, first serve. So the first 100 people are going to be the first 100 people to go through the different cohorts. Unless you have a conflict, then you can opt out. So there you go. Do it.
Let's see. Looking to get into the space, but areas around me that I like are banning STRs quickly.
Yeah.
Any advice on how to research how to combat this?
Yeah, so the question is about regulation and Airbnbs being banned. Look, I maintain that regulation is our friend, and any area or community that is not welcoming short-term rentals doesn't want our tax dollars and doesn't want our tourists and doesn't want us to participate in business there. And you don't want to do business in any of those places. So rather than fight it and fight an uphill challenge and so on and so forth, find locations that do welcome short-term rentals, that do welcome Airbnbs, that do charge taxes and collect taxes and live off this lodging, overnight stay, hotel, whatever they call it. But find locations that are friendly. There's no reason, I don't know where you live or why you think you have to invest only there, but let's just say that it's a mountain area. There's plenty of mountain areas that love short-term rentals, and just do your business there. You have to get comfortable doing remote hosting, which is actually quite liberating because it's easier. It allows you to diversify, and you can create that 3.0 portfolio that an institution is going to want to buy. They're only going to buy places where the regulations are favorable. They're not going, an institution's not going to sit there and try and argue with like the local community about their business. They're law abiding. They're only going to buy portfolios in locations where the community embraces the short-term rental market. And communities, everything is cyclical. So they may be pro it, then they may be anti it, but eventually when they realize like, hey, I don't understand, again, 3.0. In 2.0, it's fine. Oh, we're doing so well. We don't need the tax dollars. We don't need people to stay here. Everything's great. And then 10 years forward, it's like, I don't understand why tourism is down. And I don't really understand why tax dollars are down. And why is the neighboring town over there doing so much better than we are? Why is everybody selling here and buying over there? So just position yourself over there first.
Richard, will the first alpha cohort have access to future versions as they are improved?
So the question is about the first alpha cohort and future access. The answer to that question is, if you participate in the second offering, where you can go through the cohort-based class as many times as you'd like for 12 months, you will have all of the updates, all of the new examples, all of the new analysis, all of the new deals that I'm working through, and you'll have multiple opportunities to pitch if you want me to co-invest. That's just a reminder in case people came in late. One of the benefits of going through the cohort-based class is the education that you're receiving. The way that we are investing as professional investors allows you then to pitch me, like in a Y Combinator or a Shark Tank sort of approach, your best ideas, and I'm going to be funding via Stomp Capital and accredited investors, that co-invest with me. We are going to be investing up to 20% of our portfolio in other short-term rental cohort-based course graduates. So you will get my personal mentorship, all of the ways that I invest, all of my guidance, all of everything, because I'm going to be a co-owner alongside of you, but only for those that are participating in the cohort-based class. So if that's something that's of interest to you, you should do the module, which is basically still 50% off, that allows you to participate as many times over the course of a year with fresh content, fresh examples, fresh portfolios, fresh analysis. And I also just want to mention, again, in case people got here late, we're doing our first ever professional investor summit, October 22nd through the 24th. And that's basically 72 hours with me and Erica at my Palm Springs hotel, October 22 through 24th, for only 12 people, because that's how many rooms we have. And so it's 72 hours where we are just gathered with the most serious professional investors. Sick. Yeah, it's going to be insane. Erica's going to do all the fun stuff and food and beverage and all that. We're staying at the hotel, but it's basically a way for you to build an instant community around like the most serious people with the most money to invest and grow as quickly as possible. So for those of you that are really looking to do this seriously and professionally, mark your calendar and go ahead and buy that at the checkout tomorrow, 8 p.m.
So I've had a couple of people ask whether or not it's relevant to Canadians and to the European market as well.
Oh, cool. So the question is, does the cohort-based course work in Europe and in Canada and everywhere else? And the answer is yes. This is not a US-centric idea at all. And in fact, when I worked at the Blackstone Group, we made global investments. We did create smaller portfolios. I had a portfolio that was managed that was European only. So like there will be smaller pockets of institutional capital that say, I want Latin America, I want the Caribbean, I want Europe, I want Canada. Or like most of the institutional capital will be like, I want global diversification. So if you can go out in Canada and implement these exact same strategies and own the Canadian 3.0 market, if you wanted to sell, and I keep stressing this because I intend to own all of this real estate that we're gathering and all of the investments that I'm going to be funding for cohort-based graduates. Like, I'm a buy and hold guy. That said, and I haven't said this in this live event, and I probably should have, so I apologize. What we're doing is we're basically buying single family homes on comps. So we care about what the house next door to us sold for the Joneses. We care about what the house across the street sold to for the Smiths. But when we turn this thing into a professional portfolio, we're going to sell at what's known as a cap rate. And what a cap rate is a return on their investment for the professional investor. And that's all they're buying. They want a cash flow stream of income. So the more steady our cash flow stream of income is, the better. The higher the cash flow, the better. The higher the cash flow and the more steady, the more premium you command, or the lower cap rate. And so we have a very unique opportunity. Short-term rentals right now is literally, listen to this, it's literally the only real estate class that does not trade on a cap rate. So I don't care if you're, in strip malls, if you're in offices, if you're in retail, if you're in industrial, if you're in warehouses, it doesn't matter. They all trade on cap rates. Nothing else trades on comps. The only thing that trades on comps are single family homes. And when we buy a house on a comp, even at all-time highs, and we add value and we increase the rental income and we diversify it by creating a portfolio of these assets, we will sell them on at a cap rate, and your exit could be extremely lucrative.
As crypto becomes a bigger part in this world, is there anything that can prevent us from offering a discount to guests if they pay in crypto?
Is there anything preventing? No, I don't think that there's anything preventing you from offering a discount for people to pay in crypto.
This is from Serendipity OBX.
Serendipity OBX, what's happening? OBX in the house. No, there's nothing that prevents you from offering a discount. But again, I don't like to discount anything. I think that offering to take payment in crypto, you might even get more, because a lot of these individuals that have a lot of crypto, like, they've got a lot of crypto. That's why Beeple's NFT sold for $69 million. And if that had to be sold in US dollars, I don't think it would sell for 69 million US fiat dollars. It's just that whoever bought it, might have been Justin Sun, I'm not sure. He has so much crypto that it's kind of like funny money. Anyway, we've got 140 people on YouTube, and we've got 30 on Facebook.
You're ending at 9:30.
I'm ending at 9:30, so 8 more minutes?
Yeah.
Okay. So here's what I would say. For those of you that are still here, and I appreciate it, looks like we have a lot of people. I hope this was really interesting and engaging. This is really just the tip of the iceberg. I'm sharing with you like the bullet points, the conclusion. You can go do this on your own. You don't need me to do it. You have to understand that this is an opportunity. It's fleeting, right? It's not going to be here for the next 20 years. I guarantee, with all of my heart and soul and mind and everything, that this is going to happen. I can't tell you how quickly. I think it'll be more quickly than we anticipate. The reason I'm really thinking it's going to happen much more fast than I thought, a year or two ago, was the announcement that Blackstone, my prior employer, spent like $7 billion and just purchased, 16,000 single family homes for long-term rent. It's so easy to take that next step and say, instead of signing a 12-month lease, why don't I just put it up on Airbnb? That's like literally a little baby step. The hard thing was to say, I'm going to go buy 16,000 homes. Now, they bought it from one transaction, right? I think they bought it from Invitation Homes. Invitation Homes was probably the person who went out and did all the roll-ups from the mom and pops. They didn't necessarily buy ones and twos. They might have bought it from a developer who sold them 10. They might have bought it from, the guy that owned all of the properties in this one zip code, or somebody who owned all the properties in this one county. And they bought 10, 20, 50, 100. And so they did the roll up, and then they exited at a premium to Blackstone, because Blackstone said, you did all the hard work. You've de-risked this investment. All I need to do is pay you. And guess what? That's really easy for me, because I've raised $100 billion. So I'm totally cool having a longer time frame, a longer time horizon. I will make that back. But it's really easy for Blackstone to say, if I can make 3 times as much money on short-term rentals as I can on long-term rentals, I'm effectively taking that 16,000 single-family home portfolio and turning it into 48,000 homes with no more CapEx. Now, I have to spend a little bit more money and have a host or co-host, and I have to understand dynamic pricing, but these people are smart as anything. So like they will figure it out. They are, I guarantee you, sniffing around, circling, investigating, testing, I don't know, whatever they're doing, but I'm telling you that this will happen with certainty. Zero doubt. I just can't tell you when. All I can tell you is rather than wait for it to happen, I'm positioning myself and my investors and my followers and my subscribers and the people in the email list and the cohort-based people intelligently ahead of the curve so that we can go ahead and build that sustainable moat. And then if we decide to sell, we're going to sell on a cap rate and make a lot of money. Period. It's not that hard. You just have to do it, right? So I'm sharing with you what to do. Just do it. If you want me to hold your hand and guide you and mentor you and participate alongside you with hundreds of other people over the course of the different cohorts, join us. We'll hold you accountable. We'll do case studies. It's this Harkness method where there's going to be participation. There's going to be community. You're not going to only learn from me. In fact, a lot of the things that we're going to be learning, I'm going to be asking you, what do you think about this? What would you do? And you're going to have to think on your feet. You're going to have to do your homework. You're going to have to be prepared. You're going to have to come and have ideas. And I don't want you to be intimidated by that. That's not supposed to be like, oh, I'm not ready for this. If you feel like you're not ready for it, then you must, right? If you think you're not ready for it, then you must. Because if you're not ready for it now, you are not going to be ready for 3.0. So if you think this is something that's of interest to you, just do it. You know, by the way, 100% money back guaranteed at any point in time. If you're not getting your money's worth, you get your money back, right? I'm not interested in keeping anybody's money who's not getting this. But I know for a fact it's going to be 50x, 100x. It could change your life. It could change, you could quit your W-2 and do this. So I'm not worried about the money back guarantee. But if at any point you're not interested, it's not working, it's not what you thought, the content isn't good, it's not helping you, no problem. Give you your money back. Zero questions. And I see we've got people signing up right now, dozens of people signing up for the cohort-based wait list. That's awesome because again, we're only announcing it to the wait list. And we have a few people that have signed up for the Stomp Capital who want me to manage their money and want to co-invest with me. So again, if you want that, you want it done for you, you want 3.0 exposure, but either you can't scale or you don't have enough money to go buy another house or you want instant diversification or whatever, go sign up for Stomp Capital, www.stompcapital.com. And you can just invest with me.
People can invest in Stomp?
I think it's 25,000 by the legal documents. We haven't opened the fund, so we haven't raised any money. Although that said, I should tell you right here, right now, you heard it here first, I've got an insane opportunity that we are extremely excited about. And yeah, very, very close to signing an accepted offer. I don't like to celebrate these things because it's premature.
I know.
Yeah, it's premature, but we're doing some insane things that we are going to put into the Stomp Capital portfolio. Again, my lawyers would want me to tell you this is for accredited investors only. All investing carries risk. This is not financial advice, but if you want it done for you by this guy, then come join me because we're going places.
So what if they have less than 100,000? Like, is there going to be an opportunity to invest a lower amount or a lesser?
Yeah,
amount?
I thought I said 25,000.
Or sorry, I
Yeah.
apologize.
Oh,
25,000.
at some point in the future, no promises. We're working on a couple of different alternatives and vehicles and so on for people that have less than that to invest. I can't share.
I had somebody that asked me about 10,000. Somebody
10,000.
asked me about 15.
10, 15. If you're an accredited investor, go to Stomp Capital, put your name on the wait list, and we can have these conversations when it's appropriate. I just, I can't share information publicly that I can't share. That said, we want to communicate with you. We want to get to know you. We want to grow you. And, if you have 15,000 today, that doesn't mean you don't have 25,000 in just a couple of weeks or months or, soon. So in any event, I think Erica wants to end this shortly. My daughter's here with a couple of friends.
Yeah, you've got a
I've got a lot of, wonderful guests back home, but I want to just underscore a couple of thoughts. This isn't a scary thing. This isn't fear. I'm not instilling fear. it's working. You guys are doing really, really well, and I'm proud of you, and you guys are working hard, and many of you are growing and scaling and generating wealth and reinvesting and, so on. So it's working, and that's fabulous. All I'm really trying to do is to keep it working and optimize it, make it even better. And I know what's going to happen without any doubt. There's zero question. There's zero reason that the short-term rental market is the only real estate class that doesn't trade on a cap rate. It makes zero sense. It's just not there yet because mom and pop, like you and I, are buying them based on comps. But that will change. There's zero doubt that institutions that need higher returns are going to find exactly what you do. You could buy a multifamily house. You could sign a 12-month lease. You elect not to. Why? Because the returns are higher. You're being compensated a disproportionate amount for the vacancy risk that you accept. You're being compensated a disproportionate amount for the amount of work that this is versus a 12-month lease, and you're making 2 to 3 to 4 times more than if you signed a 12-month lease. And knowing that, you elect not to do that. You think these institutions are dumb and they're going to be like, no, we elect the really low returns. That's what we want. No, they're not going to do that. They're just not there yet. The reason they're not there yet is because this is an emerging asset class, and the best time to invest in an asset class is before it's an asset class, while it's still an emerging asset class, because the institutions aren't paid to take big risk. That's the exact opposite of what they're seeking. So you and I are out there, we are taking this big risk, we're proving the business model, we're growing, we're scaling, we've got 1 unit, and then it went to 2, and then it went to 4, and then it went to 8, and there's somebody who was on before that had 30 properties that they manage. Once they realize like, oh, I can take my 12,000 homes that I own and stop doing 12-month leases, and I can just short-term rent it and make 3x, like that's a no-brainer. But once they start doing it, it's what's known as return compression. The amount of capital coming in will reduce the rate of return. And for those of you who don't understand why, let me give you an example. I'll do this investment and I'll make 100. Erica will come in and say, you know what? I like 100, but I can't get 100, but I'll do it for 99. And then Tom's like, I'll do it for 98, 97, 95. At a certain point, enough money comes in that, they're making 2 somewhere else. And so they'll literally take 4. So while we were making 100, 99, 98, somebody else is coming in with a different cost of capital and a different investment opportunity set and saying, I'm only making single digits. Like, hell, I'll come in here and I'll take 11. And so that capital compresses returns guaranteed in every single investment opportunity that I've ever looked at, in every single asset class. That's just what happens when capital comes in, which is why we always want to be ahead of the capital flow, which is why I got to Airbnb and short-term rentals and crypto and everything else ahead of the institutions, because once the institutions come in, you want to ride their coattails, you want to exit to them, you want to sell to them. And usually in historical times, institutions are ahead of the mom and pop. Usually we're the ones who are late to the party. But in these 2 asset classes that I'm a heavy investor in, crypto and short-term rentals, it's the first time that it's been democratized that mom and pop and individual investors are ahead of the institutions. And so I just want you to take full advantage of it. So a couple of quick thoughts on that. Cohort-based class tickets go on sale tomorrow, 8 p.m., Tuesday, the 20th, 8 p.m. Eastern Standard Time. They're on sale for 72 hours, only to the people on the wait list. If you can't make the first cohort, the alpha cohort that starts on July 27th, don't worry, you have up to a year to participate in any other one, but take advantage of the discount. You're on the call. I hope this has been helpful and you believe in it and you want to do it, and you want to do it sooner, right? Like, you don't want to wait a year to start building your moat. You want to do it like yesterday. So go ahead.
The first class is the 27th.
The first class is on July 27th. Again, Tuesday, Thursday, I think it's 6 p.m. to 8 p.m. Eastern Standard Time for 3 weeks in a row, 12 hours of content, interaction, and then on your own, you're doing homework, case studies, getting prepared, and coming to class where we have an open discussion of everything that we've just talked about, and also all the homework, and you guys will be blown away by the case studies and the content and what it is that we're building here at EdgeCamp and at Stomp Capital and the deals that we're looking at. We're sharing it all with you, totally transparent. So I'm really excited about it. And again, if it doesn't work for you and you want your money back, no worries. I have zero concern about that, and I'd be happy to do that. So you might as well try it. And that's really it.
Join the email list.
Join the email list. If you can't, wow, we've gotten dozens of people for the cohort base. That's amazing. All right, well, look, I'm really excited. I've spent a lot of time.
Join the email list.
Join.
Remind them where to go.
What's that?
Remind them where to go and how to do that.
Join the email list, www.str.university. I send a daily email to over 10,000 of your peers. So if you're not getting that, you're behind. Get it. Might as well. It's free. Just totally do that. I was about to say something else.
Listen to the
and
podcast.
Erica wants you to listen to our podcast, which is back. I mean, we're just trying to educate as many people
and email
as
us
possible.
With anything that you want us to discuss or anything like.
But I just want Erica's just going off over there. She's having a great time. I just want to share with you that this has been really, really a ton of fun. A lot of thinking I've done. I was really grateful to have been picked by Maven, which is by one of the founders of Udemy, the largest online platform. And this is their next version, right? Cohort based, where we go through with peers and we go through as a community, we're held accountable and so on. So like this is online education 2.0, if you will. They're backed by Andreessen Horowitz, one of the best VCs on the planet. And to be part of their alpha cohort, to learn how to do this, I've been going through their cohort-based class a couple of times a week for several weeks now, and doing homework and preparing and creating my curriculum and preparing the syllabus and doing all of that, which has really got my brain sort of around the opportunity and my brain around how to teach this. And I just want to share with you that what's really critical through these lessons is the understanding and the repetition so that you can do it yourself, right? Like that's ultimately the goal. I'm not going to spoon feed you all of like the specific details that you need 6 forks per head and this, like you guys have that. And if you don't have that, there's tons of people on the internet and elsewhere that are teaching that. I'm teaching you how to fish here. I'm teaching you how to be a professional investor, whether it's in short-term rentals or in any other space. You're learning how to be, ahead of the curve and think for yourself. And that's invaluable. And in doing all of that, you're generating massive wealth. So that's the purpose. That's the premise. The content is spectacular. I'm super psyched. I've been working my butt off on it and I can't wait to share it with you guys. I know for a fact it's going to change lives. And I'm very grateful for that. And again, for those of you who are really serious and have a lot of money to invest in this space, and believe it or not, there's a lot of people that follow me that do just this. Consider joining us in Palm Springs, October 22 through the 24th, 72 hours with me and 11 other people that are just hard charging and committed and growing and have capital to invest. It's going to be remarkable. So, all right, a couple more thumbs up before we go. If you guys are on Facebook, I love those hearts. Blow it up, get it going. Let's really do this. I think a new video is coming out on the YouTube channel tomorrow. Sign up for the email list, sign up for the cohort-based class. Alpha first, baby.
Listen to the podcast.
Erica's pushing for the podcast. I agree. The podcast is great, by the way. 91 likes on the YouTube channel, 66 reactions on Facebook. Once again, YouTube, we beat them. Well done. And I can't wait to put these tickets on sale tomorrow, 8 p.m. Waitlist only, 72 hours. First come, first serve. So if you want to be on that July 27th date, sign up immediately. Do not wait, because once that first one is closed, then you're going to be in the August one. And once that one's closed, then you'll be in, I think it's September, October is the next date. Whatever it is, if you know you want to do this and you're committed to it, just make it happen. The other thing I should say is if you can't attend one of the live sessions, you got the recording. I encourage you to attend, free your calendar, do whatever you need to do, move it around, make it happen. But if you can't, you obviously have access to the recording, so you can make up that one session. So don't let the fact that you have one conflict potentially stop you from growing, stop you from taking advantage of this opportunity. And if you know you want to get started 1 week from tomorrow, July 27th, like you can't wait, you're running to the starting line, you really want to go, then you got to be some of the first people in the line, because that's how we're going to do it. First come, first serve basis. That's it. All right, guys. Really appreciate it. We've got dozens of people who signed up during this live event. We already had, I think, nearly 600 people, so it's just growing. There's a lot of interest and demand. 8 p.m. tomorrow. I think we even have PayPal, Stripe. I don't know. That's all Hardik. He's got it all buttoned up and lined up.
Hardik!
Thank you, Hardik. Thank you, Erica. Thank you, viewers, watchers, listeners, members, friends, email recipients, curious parties, professional investors, hosts, entrepreneur hosts. And here's what I will say. STRU introduces STR 3.0. We're launching the cohort-based class, Professional STR Investing and Management for the Future. So let's future-proof everything and let's go.
So good.
All right, guys. Have a great night. Thank you for your time. Thank you for your attention. And do me one last favor. Just like the video, comment,
and subscribe.
Subscribe, the whole thing. You guys know the drill. You guys have been around the block. But the best is yet to come. Like literally, the best is yet to come. I know you think I just say that. I don't just say that. It's 100% true, but you got to do it right. So let me help you. Let me guide you. Let me mentor you. And I can't wait to co-invest with you. If you're finding deals and you don't have capital, go through the cohort-based class. Pitch me, show me your best ideas, and we will build a magnificent portfolio together. I can't wait to do that. That's one of the most exciting things for me personally. It helps me diversify, and that's my moat, right? Like if I see better deal flow and more deal flow than Blackstone, we win. So let's go. All right, guys. Tomorrow, 8 p.m., the Eastern Standard Time. The internet is open. Let's go. Let's go. Let's go. See you there. See you July 27th, friends. Have a great night. Thank you. Like the video. I'm going to like the video, and I'm going to like you guys. Hasta mañana.
Good night.
Am I sending an email tonight? I can go home and write a quick one. I'm going to go home, write a quick email. So if you're not getting the emails, get on there now. And appreciate your time. Appreciate everything you do. Be well, friends.